Welcome to the Finding Financial Freedom podcast with the Frugal Physician, where Dr. Disha Spath will be your companion on this exciting financial adventure. Get ready to conquer debt, build wealth, and embrace a mindful spending lifestyle that will empower you to live life on your own terms.
At Reza and Sharif CPAs, they provide more than just tax returns and financial statements. They deliver strategic financial solutions tailored to your needs. Whether you're a business owner, physician, or investor, Reza and Sharif CPAs can help you navigate complex tax laws, maximize savings, and build long-term wealth. With expert tax planning, accounting, and advisory services, Reza and Sharif CPAs ensure your finances work for you, not the other way around. Take control of your financial future today. Visit rezasharif.com. That's REZASHARIF.com to see how they can help you. Welcome back to Finding Financial Freedom with the Frugal Physician. I'm your host, Dr. Disha Spath, and today we're diving into a crucial topic for professionals, especially physicians, who want to protect their income and financial future. Disability insurance is one of the most important safety nets you can have, but for many, the process of getting coverage can feel overwhelming or exclusionary, especially if you have pre-existing conditions or don't want to go through medical underwriting. Joining us today is Jamie K. Fleischner, founder of Set for Life Insurance, who has helped thousands of professionals secure the right disability coverage. She's here to break down the ins and outs of guaranteed standard issue policies and what you need to know to make the best decision for your financial future. So let's get to it. Hi, Jamie. How are you?
I'm great. Thanks for having me.
Thank you for coming back to discuss this really important topic. Can you please explain what a guaranteed standard issue policy is for those of us who don't know, and how does it differ from the traditional disability insurance policy?
So to take a step back, typically when you apply for a disability insurance policy, you need to go through a medically underwritten process. So what that entails is an application. They ask you a series of medical questions, head to toe, last 10 years. And then based on that information, they'll require information from your doctors. They'll come back, they'll process everything, takes about 4 to 6 weeks, and they'll either say, yes, we can offer you a policy, no, we can't, or we're going to exclude something specific. In about a third to half of the cases, you either get something excluded or you get turned down. So it's the hardest type of insurance to acquire just because it's the most likely to happen. Also, the only time that they'll ask you the medical questions is when you initially get the policy. So once you have the policy, you can then increase it down the road without further medical questions. So then if you're thinking, gosh, it's such a long, arduous process, or maybe you have some pre-existing conditions, or maybe you just don't want to have to go through that whole process, there's now available something called Guaranteed Standard Issue, or GSI. It's relatively new and it's available to medical residents. And it's only available at select hospitals, and it's only available through select brokers like myself and some others out there. So it's not available to everybody, but if it is available, it's absolutely something worth exploring. So what a guaranteed standard issue policy is, if you're a resident at one of these select hospitals, you're able to acquire an individual disability insurance policy, no medical questions asked. So they're not asked at the time of application, and they're also not asked when you go to increase the policy in the future. So it's really a great opportunity for a lot of medical residents.
So what's the coverage like with these policies?
So as a medical resident, you can get up to $5,000 a month. As if you're in the last 6 months of your training, you can get up to $7,500 a month. They'll allow you to increase up to a total of $15,000 a month without further medical questions.
That's pretty significant. So just to recap for our listeners, the reason we need this disability insurance policy is because we don't know, we're spending a lot of time getting education and investing a lot of time during our residency and fellowship training to finally make a paycheck. But what if life happens, something happens, you can't practice medicine anymore, you get in a car accident, you develop a medical condition that might keep you from practicing fully, disability insurance insures against that risk, that if somehow your income making ability goes away for some reason. And this is considered a really important part of the umbrella of protection we put around ourselves and our families. And if you need a reminder on that, go back and listen to the first few episodes of this podcast where I really went into depth about the protection and the umbrella that we need to establish as part of our financial plan. So, Jamie, going back to this is a really interesting policy because, a lot of people get excluded because they have a pre-existing condition that these insurance companies are not willing to insure. So this sounds like a very important thing to know, especially if you're a resident and you have access to this policy. So why is it that only certain programs are offering them? Why is this not more available?
Well, there's some certain things from the back end, from the insurance company's perspective. So they want to make sure that it's marketed properly so that there's not what's called adverse risk selection. So meaning they don't want only the unhealthy people to take the policy, the healthy people to go elsewhere. And then all of a sudden they have a lot more claims and risks. So in order to do that, there's a couple of things that need to be in place. One, they only want to have select brokers who are experienced, who know what they're doing, who are helping people properly and are doing it in an ethical manner. Number two, there are some different things about the policy in order to get it. So in order to be able to get a GSI policy, you need to apply for that policy first. Meaning if you go elsewhere and you apply for a policy and you get turned down or you get an exclusion on your knee or something, you're no longer eligible for the GSI policy. So you always have to take that GSI policy first and foremost to be able to get that. And that's one way that, it helps everyone. So they're not just saying, oh, all the people that got turned down elsewhere, now they're going to go and get this policy. Mm-hmm. So even if you're not sure or you say, yeah, I'm totally healthy, you might be surprised, meaning people, you go see a chiropractor once, all of a sudden there's an exclusion on your back. Maybe you're taking meds for ADHD or anxiety or depression. That's an exclusion. That's a very typical one. So in order to get the policy, again, it is important to make sure that you apply for that first. Then I do have a lot of clients who have high income potential and they say, well, maybe 15,000 isn't going to be enough to cover them in their career. So in those types of situations, what we usually do is we get the GSI first, like maybe 4,000 a month benefit, and then we get 1,000 a month with another company. And so what that's doing is sort of offsetting all of the risk. So if you have benefits from more than one policy, you can then increase in the future for up to 30,000 a month in the future. Again, no further medical questions. But again, get the GSI first, get it in place, then go through the medical underwriting process. Then if you get an exclusion or something elsewhere, it won't impact your current GSI policy.
Yeah, I think Jimmy went through, learned this the hard way. Jimmy from Physician Philosopher, he's told his story on this podcast before where he got turned down by another company and then couldn't get the GSI policy offered to him in residency. So it's very important to note this. Are these policies labeled guaranteed standard issue, like right on top so that the residents know that's what they're getting offered?
Well, I think you have to talk to your broker and find out if you'll know if it's guaranteed standard issue because there's no medical questions asked and the policy is issued within 48 hours. So you'll know that it is. Mm-hmm. And so if you're a resident and you're not sure, ask if it's available. And if it's not available, maybe it's in the process. We're working on getting these policies. I think right now we have like 200 or 300 hospitals around the country, and we're getting more and more of them. And so in order to keep those policies at the hospitals, there also has to be a certain percentage of total residents who get a policy too. Mm. So just because it's available now, people might say, I'll wait till next year, or I'll wait till I'm finishing my training. It may not be available at a later date either. So it's relatively new in terms of how they're building this business.
Is this something that the residents are paying for out of pocket, or is this something that's getting covered by the program?
So this is totally individual, and it's not through the hospital. It's through the independent or insurance agents and brokers. So Now, the benefit of it being an individual policy, there's a lot of benefits of having your own individual policy. Most people at some point in their career, most physicians will have their own individual policy because you want to have something that's portable that goes with you throughout your career. Most physicians aren't at one hospital or one practice their whole career. And so, again, you can get up to 5,000 regardless if your group or your residency program has a policy, and then you take it with you throughout your career.
Yeah, that's really important. That way you don't have to worry if you're changing employers that you're going to lose this access to this policy. You have your own. Now, speaking of own, are these GSI policies own occupation?
Yes. So these policies have all of the same benefits that you would get in your own traditional policy. So as you mentioned, own occupation, that's the most important language to have in an individual policy, because what it says is if you're sick or injured and you can't perform the duties of your occupation, and in medical terms, that's your specialty or even subspecialty, you can't do your subspecialty, you're going to get paid your benefits, even if you can go do another specialty or another occupation. So for instance, I just had a client in the last week. He's an orthopedic surgeon and he had a severe traumatic eye injury. And so he's going to go through several surgeries on his eye. He is not going to be able to perform surgery because he's not going to have the depth perception. That's an own occupation claim. So if he decides, you know what, maybe I can teach or I could do some research, or, he's getting antsy at home, he's still going to get paid his full benefits regardless of income earned elsewhere, or if he pivots and does another medical specialty or an entirely different occupation. So that is covered in the policy. All of the other riders that we recommend are also still in there. Residual partial disability rider. So let's take the same guy. Let's say he is still doing orthopedic surgery, but on a limited basis. Maybe his income goes down by 40%. He would get 40% of his benefits. They look on a month-to-month basis. So you don't have to be totally disabled. That's really important. There's still cost of living riders on the policy. So if you're on claim for a long period of time, instead of getting a fixed benefit, it'll go up each year, compound that you're on claim. And then the last thing, like I mentioned, are those future increase options. Those are critical, especially for medical residents. So again, not only do you not have to answer the medical questions now, you won't have to in the future. So the only questions they're going to ask in the future to increase your benefits are financial. So you have to have the income to justify it, and they'll let you buy more benefits.
So how do the premiums compare if you're getting a GSI policy versus a traditional underwritten disability
So it's
insurance?
still the same thing. They're still discounted. They still have the resident discounts. And then those discounts still apply to all future increase options. So you're really not giving up anything. The only thing you're really giving up is that you can only increase up to $15,000 a month. And so again, if that's the issue, then you also supplement with another policy with another company to be able to have more than that 15. Otherwise, you're not giving up anything.
Okay. 15,000 sounds like a pretty reasonable amount for a primary care doc to have in disability insurance. I guess we have to keep in mind, though, this insurance only goes until like 65, right? It doesn't cover retirement. So you still have to put some of it away.
Correct. Correct.
Okay. Are there any discounts or special rates available to certain groups?
So all of these policies come with all of the available discounts. The best discount that you can get on an individual disability policy for a physician is the resident discount. Okay. It's the most significant one. Now, you can't stack discounts. Like some companies have discounts. We have discounts for members of the American Medical Association or different associations. The best discount you can get is the resident discount. So again, getting it prior to graduation. They'll actually let you go up to September 30th after graduation. So if you're in the middle of graduating and you're moving around and everything, you can still get the policy up to a couple months post-graduation. But it's really imperative to get it during that time because you're going to be saving anywhere between 10 and 15% throughout the life of the policy and on all of those increase options. So for the exact same coverage.
Yeah. So would it be beneficial at all for a resident that doesn't have pre-existing conditions to go through the underwriting process for a traditional policy?
It really kind of depends. Again, if they think that they're going to need more than that 15,000, the risk of doing that is even if they think they're healthy, there might be something that they didn't even realize was a big deal. And so they do apply and they get any kind of, modification, they're exempt. They can't get the GSI policy. So in that situation, I would still recommend get the GSI policy first.
This show is sponsored by Set for Life Insurance, the ultimate client experience in the insurance industry. Are you looking for the perfect insurance coverage that suits your needs? Founded in 1993 by President Jamie Fleischner, Set for Life Insurance specializes in individual life, disability, and long-term care insurance. As brokers, they represent numerous companies in the industry, ensuring that their clients get the best products at the most cost-effective rate. What sets Set for Life Insurance apart? You'll enjoy special discounts, priority underwriting handling, and even exceptions in the underwriting process. So why wait? Contact Set for Life Insurance today and let them be your insurance partner for life. Visit their website at www.setforlifeinsurance.com or call them toll-free at 1-888-553-3559. Now, are there any gender differences in rate?
Unfortunately, there's no longer unisex rates unless you live in the state of Montana. So everywhere else, it's male rates, female rates. There used to be unisex rates, which were fantastic, and we loved it because women pay almost double what men do for disability insurance, and it's just based on risk. We have more autoimmune, we have all kinds of other things. Now we pay less for our life insurance. We live longer. We just tend to have more problems along the way.
What makes Montana so special? I want to live there.
I don't know. Of all states to have unisex, I don't know. I was kind of hoping they'd all go back and just have one rate for everybody. It would be great.
Yeah.
But unfortunately, there's still male-female rates.
Yeah. I guess that makes sense. We do have childbearing and all the complications that come with it too.
And more likely to maybe have straining a back by lifting a patient. Just a lot. And again, like I said, a lot of autoimmune, more rheumatoid arthritis, a lot of different types of conditions that could disable you.
Yeah. What if someone moves states and goes from New York to Montana? Would their rates decrease or would they keep that?
No, because everything is based on where you are at the time of application.
Okay.
So if you are in New York when you get your policy, you get a New York policy. Even if you move to Montana, you're still going to be paying those rates. Now, the state that has the most expensive is California. So if you know you're moving to California, do everything you can to get your policy prior. If you're moving out of California, then you might want to wait to get your policy when you're out of California. They're 20-30% more expensive than everywhere else. So The rest of the country, the rates are pretty comparable from state to state.
That's so interesting. I doubt the risk of claiming changes state to state, but it's interesting that the premium
without getting too much into the weeds, it really is more about all the regulation in California with insurance. So every time a new product comes out, it has to be approved. And California is 6-8 years behind with getting that all approved. So they're a couple generations ago of product, and it's just not priced the same as elsewhere. It's just really frustrating. It's very frustrating for insurance people in California.
Well, that's unfortunate. and there goes my plan to move to Montana.
There you
personally.
go.
Well, so how flexible are these policies in adapting to changes in a policyholder's career? Maybe they go part-time or they take a leave for maternity leave. What happens to these policies?
So those are good questions. So in order to get a policy, and again, not GSI, but because GSI, they can't ask how many hours a week. They don't ask any of that. They just automatically issue a policy. Although if you're working in residency, you're working more than 32 hours a week, typically. Right. Yeah. So in order to get a policy, you have to be working at least 32 hours a week. But once you have the policy, there's language in the policy that says non-cancelable, guaranteed renewable. So the company can never modify your policy or change your premiums. So if you change occupations, if you change specialties, if you reduce your work hours, if you stop working, as long as you pay your premiums, they have to pay the benefits. So I had a situation several years ago. I had a client of mine and she got a policy. She was during residency. And then after she had her first kid, she decided, I'm going to stay home with my kids. And so she continued to pay the premiums. When she had her second child, she had major, major complications and was completely out for 2 years. Well, since she had been paying her premiums, her benefits paid her full benefit, even though she wasn't actively earning it. It becomes a total disability contract. Again, they can't show for partial disability because there was no active earnings, but they still paid those benefits. So I have clients that say, well, I'm going to go do Doctors Without Borders, or I'm going to take a sabbatical. As long as you pay those premiums, your policy will still stay in force. Now, I also have a lot of clients I've been doing this for over 30 years. So I have a lot of clients that are now in their 50s, and they just say, you know what? Is there anything I can do? I just want to get over the finish line. My kids are out of the house. My mortgage is paid off. I'm still working, but maybe I don't need as much coverage, or maybe I don't need the inflation rider. So in those circumstances, we're actually starting to trim the policy. We say, maybe we only need a 5-year benefit. Maybe you can now wait 180 days till the benefits kick in. Maybe you don't need the inflation rider. So we're trimming the policy to kind of, transition out of those working years. So I advise keep the policy as long as you're reliant on your income. So once you're at a point where you're financially independent and you can absolutely just, be able to rely on your savings, then you don't need the coverage anymore. But again, at that point, you might say, maybe I don't need the coverage, but, I've got this back condition and this blood disorder and I'm a claim waiting to happen. So I had a client call me and he's getting, he's in his 50s. He's like, yeah, maybe I don't need the coverage anymore. Although I'm going into surgery for this or that. And I said, for major back surgery, I said, hold off on canceling your policy. You might even need to file a claim. So you have to think real carefully before you cancel your coverage, because you can't go back and buy it as easily in your 50s.
Yeah, that's a good point. I know a lot of people talk about canceling insurances once you get to 5, but those are good points that, if you're paying into it and you have things that might be claimable, then you might want to keep it. So are there any common misconceptions about GSI, disability insurance, or disability insurance in general that you'd like to address?
Well, I think a lot of people think, oh my God, it's just so expensive. I don't need it. My employer will take care of me. So I think that's a common misconception. I have benefits through work. And so why do I need to get my own disability insurance? And so the thing about work policies are they're only available while you're working there. And because they have to cover everybody, there are some limitations. And there's a lot of limitations, especially for physicians. So first of all, group disability policies or policies for your employer typically are not own occupation. So in order to file a claim, you usually have to be totally disabled and not gainfully employed. So again, my client with the eye thing, he's got individual coverage with me. He may not be eligible for his group policy if he's still doing some administrative work for his employer or doing anything. He may not be paid through the employer. Number two, if the group or the employer is paying the premiums, those benefits are all taxable. So even though they say we're going to cover 60% of your income up to $10,000 or $15,000 a month, people say, oh, I'm fine, I don't need any more. Well, that's taxable and you're in a higher tax bracket. So if it's $15,000 a month, the net amount is maybe $10,000 a month, may not be enough to be able to cover all of your expenses. So that's another thing. And then the third thing is if you ever leave your employer, you don't get to take that group policy with you. So you don't ever want to be beholden to your employer. So if you've had a change in health, you don't want to say, I can't go from working at the hospital to the private practice. The private practice doesn't have any insurance. I'm uninsurable, or I've got some medical conditions. I guess I'm stuck working here. So you don't ever want to be beholden. And they could also, if they're having, at the hospital or at the practice, they could always cut those benefits at any time. They might say, our health insurance premiums have gotten so high, we've got to trim somewhere. We're cutting out disability. So I think the misconception is my employer will take care of me. I don't really need additional coverage, or, it's never going to happen to me, or it's not likely,
Yeah. That's what we're about here on this podcast is freedom. We really like our freedom. And this is one way to make sure you can keep it and one less way to be beholden to a job. So,
yeah. And it's really one of your biggest risks. You're talking about financial planning and financial independence and all of these things that your listeners really value, but all of that is reliant on your income.
Yeah,
so if you don't have your income or your income isn't protected, the rest of it's out the window. You can forget about saving for retirement or saving for your future or paying down your debt. All of that if you don't have your income. So, and statistically speaking, it's about 1 in 4 people at some point in their career will become too sick or injured to work for an extended period of time. So the risk is there. So, it's really important to make sure, so long as you're relying on that income, it is protected. And the other thing too is there are ways to help reduce the premium. So if it is really expensive, maybe you don't need all of the riders on the policy. Maybe you don't need to protect to the full extent of your income. There's ways that we can modify or change it so that way you have some protection. So just like anything that you buy, like you're talking to your folks, maybe you don't need all the bells and whistles. Maybe you just need sort of a baseline plan and that's enough. But just having some kind of protection. And that's where I help guide my clients. So somebody, again, who comes to me in their 50s, they're in a totally different place than somebody who's in residency. You're in a different spot in your career and in your financial journey. So your needs are different. So it's really important to have a conversation and make sure what you're getting is appropriate for your situation.
Yeah. I know it's difficult to price premiums and give averages, but could you give us kind of a general ballpark of how much these policies cost?
So in general, and again, I just like to use rule of thumb, but in general, you can usually insure up to about 80% of your take-home pay. So in easy terms, if you take home after taxes $10,000 a month, you can insure about $8,000 a month of benefit. And again, a lot of it's going to, depend on your age, your gender, your medical specialty, and all of those things. But considering all of that, you can expect to pay between 2 to 4% of your income to protect that 80% of your take-home pay. So, if you're making $10,000 a month, you could probably pay about $200 to $300 a month to protect it. Again, It'll be more expensive if you're female and you're doing more surgical work and if you're older, that those things will impact you the most. But if you're a young male pediatrician, it might only cost $100 a month. If you're a 40-year-old surgical female, it's going to cost more like $400 a month. And then there's everybody in between. That's just a rule of thumb.
Okay. Well, I think that gives us a nice ballpark, at least, that we can expect to pay. Okay.
Yeah.
So what advice would you give to individuals looking to get disability insurance? Where should they start?
So in my opinion, it's really important to work with somebody who's independent. So there's 2 basic types of people in my industry. There's agents and there's brokers. So agents are employed by an insurance company. And so they're sort of beholden to one insurance company and they have financial incentives to only sell one company. I work as an independent broker, so I'm not beholden to any company. So when my clients come to me, I shop it around. So what I might advise you might be totally different than your colleague because you might have totally different criteria. Again, male, female, all the different things. So it's really important to make sure you have somebody who can shop it around to make sure you're getting what's best for you and to comparison shop. Because I get people who come to me and they say, oh my God, I had no idea I am overpaying, or I got this policy. Maybe it didn't have discounts. Maybe it was an own occupation, whatever it might be. So it really pays to shop around and see. If you are a resident, it is important to see if they do have the GSI. So we have a listing of some of our GSI on our website, just setforlifeinsurance/GSI. So we list out what GSI is, some of the hospitals. If your hospital's not listed on it, ask us because chances are it might be available. If it's not available, we might be able to get it in place, especially in most of the major hospitals. Some of the really smaller hospitals, sometimes it's a little bit harder. But if you're a resident, I think it's important to at least see first if it is in place, because again, you don't want to make the mistake of just applying somewhere, getting excluded or declined, and then finding out you could have gotten a GSI policy and you can't.
Right. So just to clarify, GSI policies are they only available to residents or could young attendings also get them?
Only available to residents. Yeah.
Okay. All right. Any pitfalls we should avoid or key factors to consider when we're selecting a policy?
Pitfalls to avoid. Again, make sure it has the own occupation. Make sure it has, if possible, it has a discount. Look for any kinds of weird exclusions that might be in the policy. Other than that, again, if you're working with somebody, everything should be fully disclosed. So I think it does pay to shop around just to see comparatively, because you might say, oh my God, that's so expensive. But then you might say, well, it could be a lot more. So comparatively, that's not so bad. So it does pay to shop it around.
Okay. Well, thank you. This has been a really interesting discussion on GSI policies. And I think a lot of people will benefit from knowing this information as they go into residency and hopefully avoid getting declined by an insurance company and then avoid being trapped without disability insurance. Any last thoughts you'd like to leave with us about disability insurance?
I think we've covered primarily everything that we need to cover. I think it's critical. Most physicians at some time in their career are going to get a policy. The ideal time is to get it during residency. If some of your listeners are listening and say, oh God, I never got a GSI policy. I'm an attending and I've got, I do take ADHD meds or something. There are still opportunities to get a policy. I don't think you should be totally, I think you should at least contact somebody like me and say, is it still possible? Because yes, it is still possible to get coverage. I typically know which companies are more likely to offer a policy than other ones, which ones are going to be a little bit more amenable to having different kinds of conditions. It's still worth a conversation. So if you're not in residency, you didn't totally miss the boat. There still are opportunities to get coverage.
Oh, that's good to know. Well, Jamie, before we wrap up, we like to end with a fun note and a quick rapid fire round.
Okay.
So I'll just ask you a few lighthearted questions. You can just say the first thing that comes to mind.
Okay.
If you weren't in the insurance industry, what career would you have?
I would probably do real estate. I love real estate.
Yeah, I could see you as a real estate agent.
Yes.
Wonderful. What's the best financial advice you've ever received?
Live way below your means and pay yourself first. So don't let lifestyle creep impact you.
Hear, hear. Totally with you on that. If you could have dinner with any historical figure, who would it be?
I would probably say like Benjamin Franklin. I think he's unbelievably interesting and has such a broad range of accomplishments. I would just love to pick his brain.
What's one thing people would be surprised to learn about you? I
was born without any wisdom teeth and molars, like the farthest back molars. So I only have one molar on each side. So and stay with my kids. So I think we're just genetically advanced.
That's right. And that's one less surgery on your medical record.
That's right. That's right. So I don't know. It's really odd. Yeah.
Coffee or tea?
Coffee.
Cool. Yes. Me too. If you could instantly master any skill, what would it be?
Instantly, I would love to learn another language. I'm terrible with languages, and I am fascinated by people who can speak multiple languages. I think that'd be really cool.
Which language would go for first?
I mean, Spanish, obviously, that would be so helpful. But I think I don't know. I mean, I travel a lot, and I would love to be able, I've traveled to Japan, and it's so hard to navigate because it's so foreign. So I just think it would be so cool to be able to learn other languages.
Yeah, I understand Japanese culture too. There's a lot of mannerisms and things you need to do to be respectful that we as Americans need to learn before we even get there, right?
Yeah, so we traveled there, and my husband had a friend from college who lives there who's Japanese, and it was so helpful because it's really hard to navigate, like the subway system and a lot of things. So, and again, like you said, culturally. So yeah, it's really helpful, but I mean, to go there without having somebody like that to help is a little daunting.
Yeah, agreed. But definitely still on my travel list. Hopefully I can read some good books.
Oh, it's fantastic. One of the most beautiful countries. And I have to say, I have never felt so safe traveling.
Huh.
Because it is such a safe country. People are so respectful and so nice. There's no crime. It's so clean. It's the way it should be. It's fantastic. And the food is great and the culture is so different. Highly recommend.
Awesome.
Yes.
That sounds amazing. Thank you. Well, Jamie, this has been an incredibly insightful conversation. Thank you for sharing your expertise on guaranteed standard issue disability insurance and helping us understand how to better protect our financial futures.
Thank you so much for having me on the show today. I really appreciate it. It was nice talking to you.
For those listening, if you want to learn more about Set for Life Insurance or explore your own disability insurance options, check out setforlifeinsurance.com, and I'll link to it in the show notes. As always, if you enjoyed this episode, don't forget to subscribe, leave a review, and share it with a friend who could benefit from this info. Until next time, stay frugal, y'all.
The content shared on this podcast should not be taken as individualized financial advice. We are here to share our knowledge and experiences, but it is crucial to consult with professionals such as accountants, financial advisors, or attorneys who can provide personalized guidance based on your specific needs.